going to start in a few minutes. Hey Anishpi. One more minute and I'll give it a go. Okay, so uh, last stream was 2 weeks ago. Feels like it's been a couple of months, not 2 weeks. Even since last week's video or update, it feels like it's been forever and the world flips upside down. Due to the bank failures, like yields cratered, oil crater, we're getting the recession trade going right now. Stocks went to 3,800 and then bounced a bit, then went to 3,900. So all over the place, no idea what's going on. Or, I mean, generally speaking, people have no idea what's going on. But we'll try to figure it out. Like the Fed has been buying uh, started buying stuff on their balance sheet again, or not necessarily buying, but trading in stuff, and it's pretty crazy. I'll tell you from the beginning that I don't have a lot of conviction in any directional play. My bias is somewhat bearish, and I'll make a case for it. But anything can happen. Whatever J. Powell says on Wednesday, that's probably going to move the market. Uh, at least short term, we can go up. I think we continue a bit down until the end of the month, and then we have a mega rally to 4,400 or something like that, and that's going to be the last rally before like a, not necessarily a crash, but like a crash like drop. And I'll start this week with the flows. So let's switch to the other scene. And this is let's go over OI. So until today, it looked pretty similar. I mean, until yesterday. We still have a lot of put OI below the current price. Uh, all the call OI is mostly around 4,000 or 400, and it's not really going to push us up that much. Like this 410 area is still a major resistance, and it's virtually impossible to get over it. Plus, we run out of puts around here, so the the 410 to 420 leg is going to be near impossible to pull off, and I don't even think we try. Like this should keep us magnetized and draw us close to it until the end of the month. So this is actually until the end of the month, and then we have April, which April is even more bearish than what we have until the end of the month. Like because there's a higher OI for distracts years, and there's less call OI above. As you can see, like this part here, which is until the end of the month, is much bigger than the April part. and unless price goes lower, I don't see that much buying for calls happening until then. One, because it's too short dated, uh, and two, because why take the risk in this uncertain times just for April? So most of the buying will happen. This is the OI after the April expiration, and most of the buying will happen. Or not, sorry. This is the OI. Yes, this is the OI. That was the delta. So this is the OI for the after the April expiration. As you can see, there's a lot more calls around current price, and there's also much bigger call levels above. Let's compare for the sake of it. So let's compare with uh, this is until the end of the quarter. And as you can see, the hump here, which is around 400, shifts a bit and it's around 420. So if at some point we start going up, uh, this will be the major minor, like the hump around 400 becomes a hump around 420. And when we start the next leg up, it's going to quickly move to 400 and then go to 420. And most likely it's going to stop around 4300. And uh, assuming we go a bit lower, this strikes will help a lot on the way up. Even puts, we have a bunch more puts at higher strikes, and we won't see this refilled. Like the lower we go, the more this will be sold and not bought, because why would you buy puts at 400 when we are at 380, let's say? And delta is kind of the same situation where we have the usual bumps around current price, and this is until April expiration, and this is delta for beyond April. Another thing we can see is you see the ratio between puts and calls and put for OI for April is visible with the naked eye that the discrepancy is large in favor of puts. Like this, the two bars here are much bigger than the two bars here. The two bars here are much bigger than the two bars here. Well, after that, it's not that big of a difference anymore. Like for let's say we have a 5-to-1 difference in OI here. Here we only have like a 2-to-1. It's a major difference. So what I expect to happen is very similar to, let's go back. Yay, the scene switcher finally works. Let's go back here and we look at SPY. So I expect something like September. In September, it was also quarterly expiration. We went down. OPEX was here, but we didn't bounce after OPEX, and I expect to continue down here as well, like we did for September. Then have a bounce at the end of the month of the quarter, a more substantial bounce. Let's assume we go to 370. The bounce can be something like 5%, which would make it like $20. So 390-ish, maybe a bit 390. So we go up, then we retest at the middle of April. We have this version with a lower high, lower low, and a version with a higher low here in June. So we go down, we retest, sorry, we go down until the end of the month. We go up, we retest, maybe make a lower high, maybe a lower low or a higher low, it doesn't matter. And then after the April OPEX, we do like a mega Uber bear market rally that kills all shorts. So let's start putting stuff on the chart. And we have quarterly range, we have the January range, we have the February range, and the one we're interested right now is the weekly range. This is going to be among the most important ones moving forward. So what happened last week in regard to these ranges is we uh, we opened here, tried to go up, rejected. We almost went and touched the January lows. On SPY we didn't, but on US 500 we did. So this was tagged on US 500, which also tracks pre-market levels. So we did tag it. Then we went up. We hit the midpoint, got rejected, went down again, went high again, did a bit of an overshoot. This was the weekly range of the previous week. It was the 50% level as well. Now it becomes the high of the previous week. And then we opened below this level. I thought this was a crucial level. I was kind of surprised we went above it on Thursday and we closed above it like this. But lo and behold, we open exactly at it in pre-market. We go down again. We hit the 50% level of this week and bounce a bit here, but it's still weak. Like this isn't a strong looking chart for me. So next week, the first 2 days are going to be a bit strange with a bias to go down. I don't think we take out the weekly lows and go for new lows before the FOMC. And even if we go up on FOMC, I'd expect it catches us around the lows, like we go down a bit. Monday, Tuesday, let's say. Let's make it yellow like usual. So we go down for 2 days. Maybe hover around here, maybe a bit higher, doesn't really matter. And then even if I'm a bullish FOMC, I I don't expect we can take out the weekly high of last week. So that's gonna be uh, the the major bull bear pivot. If we can take this one out and then show continuation, this can go much higher. Like it's possible that the rally starts now instead of after the month end. And even in that case, 410, this whole combo area here of resistances will surely stop us. This is like the maximum possible in our circumstance. But I'd expect this to be the top either way. Even if you get like a bullish reaction on FOMC, we will stop here and then we will either swing up, down, whatever, and eventually make a new low. But that's kind of it. Yeah, I saw the piece from Nick Timiraos, and he also worded it like the Fed will choose between pausing and 0.25. Like he didn't say they will decide what they do. They said they will decide what they do between pause and 0.25, which is way too dovish from my perspective. Like I prefer what the SEB did, and they did 0.5. They said they're gonna hike some more if it's needed, and that's it. And I kind of expect JPow to do the same. Plus, I think what would be scary for them is if the market does new lows before the FOMC, which I don't think that it will do because the market will also wait to see what the FOMC does. So most likely a couple of days, like the 2 days like this, with a bias to go low because participants will hedge, and then on any positive news because of vol unwind, we will go up, we will hit the weekly high, like the something similar to this. If it's bullish, I don't see us going up. I see us doing this as the bullish scenario. As the bearish scenario, we make new lows. I think the expiration already happened, didn't it? Like it's on the third Wednesday of every month. It did. It was on the 15th because we caught the first on a Wednesday. Yeah. So going back to flows a bit, um, why? Let's talk about why I think we're gonna be bearish. So this this wasn't a very bearish close for equities. Yeah, I'm convinced it's gonna be 0.25 as well. So SPY. Okay, SPY. We closed like 1 cent below 400. What did SPX do? XPX closed above 4900. So only SPY closed below the threshold for 390. So all the calls at 390 ended up worthless, which is whatever. We don't care that much, but it's not really a super bad price. So I don't expect there to be a lot of positive flows from this expiration that actually push us higher. Most of it happened here. It was kind of front run from this 2-3 days here where we were green. But on the other side, Qs were super bullish. And if we look at FANG, because FANG were the biggest winners last week, they were somewhat bullish. Like Apple is at the local high, Nvidia local high, Google not quite local high, but pretty high. Microsoft local high, Amazon similar to Google, Facebook local high, Netflix not that high, but whatever. So we have Facebook, we have Microsoft, we have Google, Nvidia, Apple. Tesla was lower. Then we look at semis. Semis are pretty high just for AMD and Nvidia. The rest are somewhat lower. But the idea is that tech through semis and the mega caps has been very high. And I don't know if you guys saw the interview from Chem. Uh, he said that one of the reasons the market is holding up is because there was a lot of put positioning on the mega caps that actually got unwound on this quarterly expiration. So that put positioning expiring provided the supportive flows for the mega caps and the semis like Nvidia and made them go up. But now with that expiration, uh, their backwinds are gone. And if the counter move should happen on mega caps, Nvidia and AMD, and should make them go down for a couple of days at least. A couple of days for up to 2 weeks, depending on other stuff as well. So the counter move on the mega caps being there and happening down will make the whole market go down. Like I don't think the market can go down, can go up without 5 of the 6 mega caps and without semis. So this being said, I think the market will stay weak, regardless of maybe we get some value stuff that recovers a bit. But with mega caps being theoretically weak, the market should not go up. And let me. The other thing is commodities, and specifically oil. Oil is still not recovering. It's actually it's consolidating bearish. Like it went below the below 75. It went below 70, and lo and behold, now 70 is becoming resistance. This is a very bad sign for oil, and I think because the Fed is at a point where it can only make a wrong move. Like if they hike, the market gets scared because they're inducing recession, so it's gonna kill commodities. If they don't hike, the market is scared because oh my god, the Fed is pausing. Something must terribly must be going on for them to pause at this point, since they were saying there's gonna go much higher a couple of weeks ago. So something must be wrong. So either if they pause or if they hike, the market reaction is gonna be negative. This is like more let's a couple of weeks in the future looking like this in a couple of weeks in the future. Short term is it can go up on a pause because VIX will get crushed. Not no other reason than that. But after that 1 day rally, which is the main reason why I expect it to cap at the weekly high, it should go down again. So the Fed has no way out of this, and whatever they do is gonna cause oil to keep going down. So we have banking. Let's go. So XLF. XLF is in the dumpster. It did a short-term bounce like for 1-2 days. Then the next day, if it undercuts this low here, a new leg down, and it should go to this. Cree, same situation. It's consolidating here, but this is a bear pennant. Like as soon as it takes out the low and it will start a new leg down, and the new leg down is what? Maybe here, so 39, maybe as low as 33. So the new leg down can easily start. XLE, same situation. Like I'll look at the oil stuff in a minute at individual names, but look, it broke the long-term channel. It's consolidating below it. We could even say it did a backtest like oil, like it went below it, tried to go up, but it got rejected by this. Now it's on a horizontal support here. I have no idea when I drew this. I think it's from the quarterly. Yeah, I remember now. So this is a quarterly pivot, which I drew a long time ago. Let's expand it. Basically, you want this to pass through as many places as possible. Let's put it at the top here. Seems to be good. So if it goes above, it's bullish. If it goes below, it's bearish. Did it turn it into support? It was a support here, and now it's going down below it. So this is not a good quarterly candle, and I expect it to go at least to this low here, like 74 at the minimum. But if it goes below 74, it will go for the next target, which is 65, and so on. Though probably not going to go below this, but you get the idea. So everything looks kind of bearish, and whatever the Fed does is going to still be bearish. And for that to change, we need positioning to change. And let's look at positioning. Did the thing changes? Okay, so let's look at the delta charts. And we're interested in put to call OI. So a lot of puts expired this week, so yesterday. But in spite of that, the put to call OI went up. Why is that? Because as a percentage of total puts, less puts expired than calls as a percentage of total calls. And we look at numbers up here as well. So we went from uh, 6.9 million calls to 3.2 million calls. And for puts, we went for 14 million puts to 11 million puts. So the drop in calls as a percentage-wise was bigger than the drop in puts. So that keeps us at a very high put-to-call ratio, which is bearish. And I checked beforehand, this will stay high until April. In April, after the April expiration, it would be 1.69. And again, let's go look at stuff. When was it the most bullish? What was the most bullish print for this? Well, it was in uh, June, and in June it was 1.44. But just 1.6 is good enough to get a bounce. It's gonna make a huge difference. And this is the ratio now. If price stays low or even goes lower, more and more calls are going to be bought, and the puts that expire are not going to be renewed. So as time passes, the next couple of weeks, the lower prices, the more this ratio will move in favor of calls for post February expiration. And um, because of this that I showed, the OI profile suggests that the rally is going to go up to around here. Like I would I'm going to bet money at some point in the next couple of weeks that we go up to 4,300, maybe even 4,400. This by June OPEX, and that's probably gonna be the peak of this bullish market cycle, because we're still in a bullish market cycle since we haven't made the new lows compared uh, to the October lows. So let's go back to SPY. And I think I can take these things out. Okay, so before this week, I drew this. We overshot it. Thought we would stop at this combo resistance here. And the target is 372. If things play out in a bearish way, I think we go lower than this. I think we even take out 370 and go slightly below it. This would require a bearish reaction to the Fed. If it's a bullish reaction to the Fed, I still think we go below 380 at some point. But the below 380 part is, it can be like 379, it can be 372. I have no idea. It depends on momentum, what the news is, what the local circumstance is when it actually happens. Maybe some other bank fails or something like that. It depends on the news. But if there is a bearish Fed reaction, I actually think we go to something like this. This is the combo of the June low and the October low. This is actually our range. If I turn on, let's take out these ones and turn on the monster group with lots of trend lines. Don't need, don't need, don't need. We need that one. Don't need this one. And the top ones I don't think we need. Okay, so let's adjust this based on what happened. So these are all based on Fibonacci levels. So let's look at the lows. So this was wave one. Should have drawn it the other way around. This was wave one. And the target for wave one is the 161.8 level. We didn't quite reach it. It was close, but no cigar. Then the first wave either retraces at 61.8 or 50%. It retraced at 50%-ish. It's not exact. Then we check the second wave. Second wave retraces in the same way, either at 61.8 or 50%. This one we can call it that it retraced to 61.8. And then the target for the final leg is the 127.2%, which is in our case is 374.41. So I'm gonna put this one here. And this one went here, and that's kind of it. And after this, we have a retracement wave. So we go here, and the first bounce is going to 61.8. Then it has a pullback to 78.6. This is the usual thing, and it goes to 50%. And then we don't know. It might be another impulsive wave down, or it might continue up. We don't know right now, and we're not gonna know, and we don't really care. But what is important about this one is the calendar. So we're in the middle of a theoretical wave 5. So consolidation here is whatever. Even I don't expect to go beyond this point by the FOMC. So we're almost certainly going to consolidate here. And when the FOMC comes, we bounce as high as the weekly, which would be this. It is slightly above a theoretical 50%. So as long as we don't take out this level here, which is the weekly high, this wave 5 can be still holds. Like even if we go back up here, there's still a possibility of going down here afterwards. The fact that we go up now, let's say if we would in theory go up now, it doesn't invalidate this wave. It's just more consolidation around this, and the move hasn't happened yet. The whole theory invalidates if we move below the weekly high of last week and have a close. Like moving intraday doesn't matter. We still have a lot of resistance here. So we can chop around here, maybe even go as high as this, and that will still allow a drop to 370 by the end of the month. So this would be the low. This would be the move up. Like I said, $20. And this would be a higher low. And then we actually start up. And let's see how high we can go by June. And let's put quarterly range. Nah, January. Don't care. February. Probably the March range when it's done is going to be relevant for us. For now, this is not that important. Uh, so this is the bull market trend line. This is not important. The important one is this one, not this one. It's this one. Okay. You see why this one is important? This is the line I don't think we go over for the next couple of years. Okay, so that's there. And I said we go to 4300, 4400 by June. June is Wednesday. This is it. So this is June OPEX. I think it fits. This one we can hide for now. So assuming this is not a retracement wave, it's gonna have 3 stages. So that was one, pull back. The second one, we should probably go up to here. And let's delete it like this and start a new one from as a 5-way sequence. So it goes up, goes down, goes up, goes down, and breaks out. Then it has a corrective sequence. Bam, bam, bam. This would be like this. And then a blow off move. Sorry. Something like this. But it's too tight. So this one will probably happen faster. So I put this one until the April, but it's too slow. It will happen in the middle of, it could play out completely to 370 by end of next week. So it's more likely that we make the low next week than that we make the low in the following week. So next week we have this. So most likely low will come next week, not in the week of the 31st. So if that happens, then the rebound part happens in that week. And we have a bounce until the first week. I said we then have a double test if it happens, Belgium. And we have a double test of this around OPEX. So the low should be around April 21st. So something like this. Let's put it on the 20th, not exactly the 21st. So that's sequence 1. Then it starts to go up because we are shifting in a new bullish environment because of the put to call OI shifting to uber bullish mode. And then we have a sequence until the end of the month. We have a pullback at the end of the month. We have a mega rally until May OPEX, which is on the 19th. So mega rally until the 19th. And the level, this level here should be a good target. So like 410. Again, let's put it on the 18th to not have it like that. What do you mean, vainglorious things? Okay, and then after, because we have a mega bull rally going on, after the May OPEX, we have a pullback. So we have a week or two of pullback. A week, let's call it, because it's bullish. And then we start going up again. This could actually be like this, much faster. It could be like a 4 or 5 candle pullback. It pulls back, it tries to go up, it does another back test, and that's it. And then we're off for the races again. And then like this. So we are on the 26th of May. We start to go bullish into June. If we are super bullish into June, we will have a small pullback here and turn the 410 level into support. This should stop around this high as well. This is good. And then we have a blow off move like this, maybe. I don't know. It doesn't really fit that much. So maybe just this, something like this. To 420, 430. And this will be like the bull trap, the ultimate bull trap. After this, it just craters. Sell in May. Maybe it happens, but at the end of May. It depends of how things break. I don't know. I know, but I think any bullish run will end at June OPEX. So it is technically a sell in May at the end of the May or at the end of the May cycle. If we call it at the end of the May cycle, I think it will be a great thing to do. Yeah. So this is the market outlook. I don't know what to tell you besides this. Gut feeling is this: we crater, we buy the lows at the end of the month. What does anyone know what the JP Morgan trade low is? I think 4600 something something JQX trade range. had it on Twitter. Andy keeps tweeting about it, but I have to look for it. It was either 4,406 or 365-ish or something. I don't remember exactly. I think it's been a while since he tweeted. I don't think I'll find it quickly. I don't know. Like it's way too far to make an assessment on it because we don't know anything about it. We don't even know what the positioning will be. My assumption is that yes, because positioning will shift again. Like it's not going to be a risk-on environment, or it's impossible for it to be a risk-on environment if the Fed doesn't do QE. And what I would expect is at some point the market, like, so let's look at it from a put buying and call buying perspective. This, no, we are here. This is a lot of call buying, a lot of put selling. Okay? 465, and what's the lows? The lows are also like 365, I think. So lots of call selling and lots of put buying. Here, lots of call buying and lots of put selling. The other way around, the other way around, the other way around. Now we will have lots of put selling and lots of call buying. We probably have a VIX explosion to above 45. Yeah, so that's kind of that's the maximum low we can see. I don't think we can go below 46.30. So VIX will blow off as well. Maybe hit this trend line here, which is 34. So let's look at VIX. We have a channel going here. We have confirmed tops. I put it here because the midpoint aligns to some other stuff. Like it was support here, it was support here, it was support here, it was support here. This was an overshoot but still counts as support. This was a resistance. So I started aligning my channels based on the midpoint a lot lately, and they're turning out great. And these are all overshoots. We don't care about them. So if we go to 370, I'd expect we have an overshoot to this channel. This was just doubled. So it used to look like this. I doubled it and it was the exact top. It looks pretty. So I'd expect a move to 370 or lower was going to take us to 44. So this was also probably going to be a great play. If VIX gets to here, just get some put straddles for a month out, and there's no way they're going to pay. No, put spreads, sorry, put spreads. Because IV going down favors put spread. So we have an overshoot of 35 maybe, or just stop at 35, but I think VIX is a short at 35. And this would align with the market bottom, and then the only way we can go is up. And positioning favors that starting at the end of the quarter. And we should go up. We have another pullback, then we continue up. I expect to have good CPI prints next month. It should have a huge drop month over month, both from a year over year drop off, because March was the first big print of last year, and this year is going to be a small print. So we're going to have low fives probably the next month. When trade 3200, no idea, man. For now, this. For us to get 4200 at this point, we need either the signs of recession, but economic signs, not this bullshit here, and not this bullshit here. Like look at tens. This is a sign of recession, but from the bond market. Yeah, I got it, Bell. Like if tens break below this level, they're going to 2.9. Did you guys see where we started on the yield curve? This is where we started. 286 was the top. So what was 286? Sorry. 286 was March 2nd. So from March 2nd until yesterday, March 2nd, yesterday, March 2nd, yesterday. And this is like the bond market, this is how it screams that a recession is coming. Uh, and this is how oil screams a recession is coming. It loses the major support that it shouldn't have lost. But the economic indicators still say economy is booming. I have no idea. I was thinking of buying TLT as well, but maybe I'm probably gonna buy some call spreads for September if the FOMC reaction pushes yields back up. So if JPOW does 0.25 and basically has the same speech as the ECB, meaning data dependent, will do whatever it takes, inflation first and whatnot, I'd expect to have at least fill this gap to 102, and 102 is probably a buy on TLT. And that would make probably 10s or 20s. Let's look at 20 year. It would make it back test this. So go back to 390, 395, something like this. And I think it will crater. One thing I looked at in the past is let's look at some bond tops or some yield tops. So yield tops tend to be double tops. Double top here. And this is a weekly. Drop, go up, peak, go down, go up again. Sometimes they reach the top, sometimes they go a bit higher. Most of the time they don't. This is 206. Top, down, double top, go down. Top, down, double top, go down. Double top here as well. Short of a double top, this one went a bit higher and then it cratered. And here we are again, which we have a pattern of with a lower high. But this is very typical of how bonds top, and this is gonna be a major top. Like I don't expect we get another leg up to take out the highs quite yet. Maybe if they first crater, like they go, I don't know, here to 2%, and then we have a resurgence in inflation, and then maybe we start another leg up. But that will take like a year or two to play out. Maybe sooner than 2 years, but between 9 months and I don't know 1.5 years to play out. So I don't think they go up anymore. And as you can see, it's on support. Like I said, 2.9 first, like this level here. And if this one doesn't hold either, we go to here to 1.68. It will take a while for this to happen, but I think if we get another push up in yields, it's fine to get a long-term position in bonds, either directly or through TLT. Okay, let's look at some individual tickers. Got anything you guys are interested in, or I'll just go through them randomly? Let's do FANGs. Financials. I I can do TA on them, but it's not that much about it. Let's do Bank of America. So these are old levels that I drew a long time ago. I think this one is the weekly demand level. The fact that it broke below this is a bad sign. So this shouldn't stop here, like this midway, I mean. It should continue down to at least this. And because this is right at the gap, again, it doesn't make sense for it to stop there. Uh, Another way we can look at it is like this. So this was a range. Let me draw it better. So let's say this was the range, okay? This was an overshoot. This is the range. Horizontal level, this was the range. We took out the lows. How low do we go? We go lower. We double it. So this is our target. We we broke out of a range to the downside. The target is 23. So this would be kind of the low of the demand area here. And it's pretty reasonable to think we get here. We get to this gap, we're gonna probably fill it. No point in not believing we fill it. And then this tight area here is probably going to be the buy zone, like this. And let's make it green. Yeah, this probably where it stops. I wouldn't buy here. At least, like, what you want to buy is not. You don't want to risk a bottom tick here because it's a falling knife. What you want to buy is recapture of the level, and recapture of the level, I mean a confirmed recapture, not just a move up. So let's give an example. So right now it's a falling knife, right? We don't know what's gonna do. So we let it do what it does. First of all, we saw it try to backtest and it got rejected. This is a very bad sign. It means another leg down will start as soon as the low is taken out. So if on Monday we go below this low here, not next leg down, and we have a support here, probably going to bounce a bit, then it goes for this area here. And let's assume it turns bullish. We say this is an overshoot. We had this we had this level, which was the top of the range, overshoot, overshoot, and we had this level, which was the bottom of the range. Okay, top of the range, bottom of the range, and I'll do it. I'll do it. I'll do everything. Just let me finish with Bank of America. So overshoot, overshoot, small overshoot, but this is the range, okay? And this was the half point of the range. I don't even, like, it's visible with the naked eye. And you see what happened when we lost the midpoint. Straight surge down, and then we lost the bottom of the range. We have a back test, got rejected strongly. We went even lower. So, and after that, we tried to get back in. It got rejected again. We continue down. So let's assume it turns bullish. What we want to see it as bullish is do this. Go back up. This will stop here. It won't go much further than this. We want to see it backtest this, turn it into support, and the buy is in this area here. And you buy with the assumption that it will go up. The stop loss is probably something around this level. A very tight stop loss. So you don't buy here. This is like knife catching. It's not on any technical support. It's in the middle of nowhere, and very high chance it goes even lower. Uh, and if it turns back bullish, you don't buy here. You wait to see what it does because it could easily do this, and you don't want to be buying there. So you buy here, you see if it turns it into support. You set a stop loss here. Maybe you buy exactly this level and set a short stop loss, and then it goes like this. It's too risky at this point. Okay, so to conclude, I think Bank of America is a buy between 23 and 24. It may stop here, but all of these levels, like you want to buy the recapture of the level, and when it turns into support, not the falling knife part. So JPM. Let's look at weekly. JPM doesn't look great either. I think this is probably lower, like this. Monthly. Holy shit, the monthly is ugly. So let's identify the range. So this is the top, probably the no, let's do it like this. So that is the top of the range. No, this one, sorry. This one is the top of the range. And the bottom is the range is probably this. This is an overshoot. So we don't care about it. Let's see where is the half point. It's 125. So basically it's this. No, wait. Okay, got it now. Something like this. No, what the fuck am I doing? Try again, last time I promise. 125.63. I'll put it by, it was this. Oh. So we're at the half point here. Have to look back. What happened here? No, this is probably not a good range. We have support here, which is a major one at 118. Finally. And then we have local supports. This is one, but I wouldn't say it's very strong. So let's say it's here. This looks stronger than BAC. I think it's buyable here. Or like worst case scenario at 118 with the long-term level here. Probably a bit lower. We don't want to target the wicks. So it's 118.14. But if BAC continues down, JPM will continue down as well. Like I don't think they will be uncorrelated from each other. Banking will drop as a sector or it will go up as a sector. So I'll make this red-ish. This is the buy if you want to try to bottom ticket. Other than that, this range is also serviceable. I think it's a very small drop, right? This would be 2% and this would be 6%. So 6% lower. Okay, so Schwab. What I don't like about situations like this is that demand has been already depleted when moves like this happen. So this was a demand zone on the weekly, quarterly, whatever you want to. Was it quarterly? This was quarterly. So this is a demand zone, and this is the next demand zone on the quarterly. And because we went through it with this wick down, it was more or less depleted. So when the next time it goes into this area, it's more likely that it will not hold. And it's not looking particularly bullish either. I would say that this is a clear buy at 36, but that's a long drop. 47, I guess it's a buy. It's difficult to TA on stuff that drops 60%, 40% in a single day. If we would have known ahead of time, like these are the levels. This is the first demand zone, this is the second demand zone. If it drops to here, it's a decent buy, and it was, but who knew? Okay, CVS. I'm still holding my CVS. What I didn't like that it went lower, but there is a great signal that it's a bottom, and it's this. It was like a 2% day, sell exhaustion day. Volume like 2x above average, 2x above average. You don't get days like this very often at bottoms. When you get a volume spike at the bottom, it's usually very, very close to bouncing. And this level is holding. It's been going down non-stop for 2-3 months. It has to bounce. Like 80% drop in the last month. If it doesn't bounce, I don't know if I should cut or not. Next level should be this. 69.70, probably 70. It's on this old trend line. I'll do quarterly. So it was this old trend line here, and it's going to meet it at 70. But given this signal, we're very, very close to finding a bottom. Okay, healthcare. What from healthcare? Anything aside from CVS? All the biotech startups got fucked because of Silicon Valley Bank, so they dropped in sympathy. And I don't know, UNH. Everything is bouncing except CVS. Same principle applies. It almost reaches target. Maybe I think this eventually goes to 450 before it bounces. ECF2. So Euro Swiss franc. This is what you mean by ECF? I don't know how to find that. EUA. I don't think so. I mean, when the bull part starts, maybe, but right now, still no, because everything will continue to drop if mega caps start dropping. So, on a relative basis, maybe, like, you're not gonna see stuff like CVS drop another 5% in a day. They're gonna do like 1% days, while something like Facebook will drop 7% or something like that. Okay, ECF2. Okay. Uh, immediate immediate sell signal is this huge bearish divergence, and besides this, weeks. So I'm gonna compare it to CVS actually. See this topping pattern on the quarterly. This immediately shows that plus decreasing volume. If this is a quarterly chart, we have 2 weeks left, and this is a low volume thing. We're right at the breaking point basically. The divergence is visible at the monthly as well. So this is the range highs. All of these were overshoots. 92.12. So all overshoot, big overshoot. And when this line breaks, it's going to crater. And the most likely level, what can we say? This is the low. This is also an overshoot. So the minimum it will go to is 75-ish. What what is this? I don't know what it is. EUA futures. This is the 50% point. What it should do is, if it's bullish, one small last bump up. Okay, once last small bump up, and then it will break down. And probably gonna do this, overshoot again, and then something like this. And if it's weak, it will do this. If it is strong, it will go back up and do this again. But this is kind of how it looks like. Overshoot, overshoot, overshoot. It doesn't like it above 92 that much. Okay, and VX. I I think I looked at this a long time ago, but I don't know when that comment was made. Oh yeah, I remember when I looked at this for you, Bella, like it's been 6 months or something, maybe even more. Okay, quarterly, not enough candles to say anything. Monthly, okay. This looks pretty good, quite. Uh, it should go to 12 and then do a pullback. So breakout, and then the horizontal level is this area here. Let's go back to daily. Probably 14 is the top of this range because it has the gap it has to fill and it should get rejected. And it's filling this one. This is 12. So it should fill this one soon and probably overshoot it. So 1329. So this one is 100% a given, like filling the gap. But most likely it will overshoot and then do a pull back down to 10. Then this and then surge up. When it breaks to this for 14 at some point in the future, it will just surge up quickly and most likely it's going to go back to the highs. You can look at this as a bunch of cup and handles. So first cup and handle is this. After it does this cup and handle, this cup, it has to do the handle for this one. So pull back here. Then it goes for this cup and again pull back here. And then it goes for this one and pull back here. Then it goes for this one, pull back here, and then finally goes for this one. And when it does this one, it's going to be a major pullback like this, and maybe retest. And the retest is either breakout and it doubles, or rejection and it does more of consolidation here. I like it. Even from this point, like 161 is exactly this white line almost. And probably just looking at this is probably going to be the top. It won't go for the weak things. It's going to go for the 361 extension. And this one is 261. It lines up too perfectly. um, this area here is going to be a major support because it's also a low. So when it gets here, it's probably going to do a big retracement, just like that. But it's probably 50%, but in so goes here, does this, goes here, and it's probably gonna go as low as this, turn this level into support, and then go back up. Breaking this level is also big because kind of kind of an air pocket all this area here. Okay, so NVX we saw, Meta. So if you were here from the beginning, you probably heard my thesis about market going down until the end of the month, or at least next week. It's more likely that the low happens next week than in the week of the 31st. And Meta is at the local top, uh, struggling to get through it. And exactly what I explained earlier, like we can look at this as a bunch of cup and handles. And we made one here, but didn't see a pullback because the earnings gap up. We went up to this one, pull back, and it's trying to break out and it's getting rejected. Because it's getting rejected, most likely it will pull back more. And let's draw an extension. I would say it's gonna fill the gap, so 160. The more it goes up without having a 61 retracement, the bigger the retracement when it does get here. Like if it gets here we have without getting the retracement, the drop is still gonna be to the same level. It's not gonna be higher. So percentage wise, it's gonna be a bigger drop. Like it could do this, probably fill the gap. Let's say we fill the gap at 154, and then go back up and maybe do this. But if it does this, it's still going to drop to 154. It's not going to drop to lower. So the drop is going to be bigger percentage wise. So if Meta were to drop that much, probably the market will go much lower than 370. So it's not going to be that. I think the maximum we see is this. So 169. How much is this compared to the close? It's 13%. Yeah, this is doable and fine. It lines up with the market drop. So this, then we go up probably until the gap fill. We cannot do the gap until the start of the gap fill. We cannot do the gap fill yet. It's way too much too soon. So what's this? So it's 12% down and then another 40, 50% by June. Sounds good. Okay, Nvidia. So Nvidia showing exhaustion. This was a gap up and it's still a positive candle, but how you should look at this is, uh, are you guys familiar with? I think you heard about the week off pattern, and is the week off. Oh no, sorry, I have to switch to the browser. Week off law of effort. No, week of method. The law of effort. So the more effort in a move, I mean, an effort is volume, the bigger the candle basically. Like if you get a lot of green volume, you should see, or a lot of volume and the candle is green, you should see a big green candle. If you see a lot of volume on a candle that is not green, uh, and the price was still green, it means there was a lot of selling. So what we are seeing here for Nvidia is a lot of effort that fails to push the price up. And this is a major warning sign. The same can be said for, no, not this candle. I thought it was this one. Never mind. So this one, lots of volume. Price is, what was this? 14% higher. And it's green volume. Like the candle were green. The color of the candle doesn't matter. But the idea is the price closed green. And lots of volume, proportionate result. So big fucking green volume candle, which resulted in a big fucking green price candle. Now we have a lot of volume, but it was a plus 0.74, 72% move up. This is a major warning sign, plus it's aligned with the channel, plus it's on the gap fill. So this means bad. And Nvidia has the nasty habit of doing these fucking things. This, this, uh, okay. So it has these rising wedges, like this, let's say. Rising wedge. Overshoot. People think it breaks out, but then it turns down. Do you see the same pattern here? Rising wedge, big overshoot, red candle with volume. Look, this candle was also a green day plus 3.06%, but the candle was red and it was a big spike in volume. This looks eerily similar. So the result was this. The result is going to be something like this as well. Not again, it doesn't allow for a lot of drops because we want to be bullish afterwards, but a retest of the channel midpoint or even a gap fill would be very welcome for Nvidia. Like if we have, let's say we have a gap fill, how big is this drop? Probably pretty big. My bad. 20%. It's huge. I don't think we get a gap fill for Nvidia as well. It's Nvidia dropping 20% would be less than 370 for the market most likely. But anyway, different story. So let's say we get either 20% or around 12% for 225 to continue to be the support, which is it's been the support until now. So 225 to 26 is the support. Let's put it here like this. 220, no, whatever. You get the idea. So either it does this and the market has a maybe we go even below 370. So option one, and then continues up, or it does this and then continues up. But the similarity between this and this are way too uh, striking. Nvidia is going down next week. Uh, QCOM. I liked QCOM a lot because it dropped. Like all the people asking if they should buy Nvidia annoys me. Instead, they should be asking, should I buy Qualcomm? um, so while I like Qualcomm because I think Nvidia and AMD will drop, Qualcomm will probably drop as well. On a relative basis, Qualcomm will drop a lot less, but drop nonetheless. And I think we see a retest of the lows here, like 107, 105, 110, something like that. I don't know what to do about that. Hope probably the stream quality or something. My camera or my screen. I didn't even see how my camera looks like because it went dark. Let me turn on the lights. 1 second. You might need to adjust your stream quality, Sling. Okay. Uh, so back to Qualcomm. Actually, we don't want it to retest this because it would be a trend line break, but we could potentially draw it like this. Ignore that wick, and it would be this, and this is a demand zone. So 110 might be enough of a drop. Qualcomm shouldn't on a relative basis compared to Nvidia and AMD should perform much better even if it drops because Nvidia and AMD are that overextended. They should drop like 5-10% per day. But Qualcomm will do like 2% days like even like this. It doesn't drop a lot. So maybe 110 is actually the buy. I think this makes more sense. Let's look back. Maybe we can draw it some in a different way. Yeah, I think this is fine. We can make it a channel as well. Oh, sorry. And we get a target for when it breaks out. And I also get more confidence because I can align the midpoint. So probably high is here, midpoint aligned here, midpoint aligned here, and then it gapped up. This is just chop around the midpoint, so it's pretty okay-ish. I think I can bring it a bit lower here, and that's it. So for Qualcomm, assuming relative strength, it's going to be this. And this is where it can drop again. How big is this? 30% until June. Yeah, this looks very good for Qualcomm actually. It's just lower liquidity SPM. Okay, so I did Qualcomm as well. HSY. Hershey. Okay, what the fuck is this? How is this thing at all-time high? So aligning the midpoint. Midpoint align, rejection at the midpoint. Support. Went above it, consolidated is still good. Support here is still good. Chop around the midpoint. Support midpoint. Resistance midpoint. So this is good. So we are at, I didn't, I'll look in a second. So we are at the top and we have to at least see a midpoint. 231, but I would be more confident in a retest of the lows. This is probably still too high. Maybe take it a bit higher, like this. Too low, sorry. Let's look at quarterly, monthly, weekly. No, this thing has to go down. Same pattern as Nvidia with the high volume. This in theory should have been a green candle. In this case, it even ended up green, but it was ended up red, but it was green on open, so it gapped up and got rejected on high volume. If this is not a top signal, I don't know what is. So Hershey should be going down to at least 230 by end of month, potentially even more because this is an ascending channel that should be a major top. The quarterly still looks good, but let's assume 230. If we assume 230 by end of quarter, then it will be the second major candle with a top wick, and not a small top wick, a large top wick that we see back to back. So this will be much lower by year end. It's the same pattern as CVS, like this kind of thing, or UNH, this kind of thing. So this is what I expect Hershey will do in the near future. It might take a while for it to break down, but uh, it can come as early as next quarter. A close at 230 this quarter just adds more confirmation to a breakdown, a major breakdown similar to healthcare later this year. FedEx. So it gapped up. This is normal. It doesn't mean anything. It's just a small rejection. Uh, I mean, it could fill the gap. It couldn't. We don't know. It's inconclusive for now. This is quite interesting. It's a breakaway. It's a gap breakout. These are relatively rare, and it's usually a good sign for the longer term prospects. I don't know what to tell you about this one. It depends how this gap, what happens to this gap. And again, because I assume the market is going to be bearish until the end of the month, it is probably going to fill it. And if it fills it, it's not that bullish, like for the long term. For the short term, it is. Like I would expect to see at least this retest. But let me look at it. This is quite interesting. Let me look at it some more, like from a range perspective, channel perspective, and stuff like this. So this was a level. This is another level. This was another level. Okay, so these are it. This is midpoint, top, and bottom. So we just broke out. So we went through the middle. No, we went above the middle, turned it into support, tried to go up again, overshot the middle, and now we gapped up and went up. I don't see why it can't go to 240 and maybe overshoot a bit, but this is kind of the maximum it can get to. Like this. This is like the overshoot range. And most likely, even if it goes down for the gap fill, it will bounce on the midpoint again and do this. Short term, I don't know. Like it's too, these gaps are very hard to predict what they will do. We could get this. If we get this, the current price, the gap is going to become support. Like if it continues up, in spite of the market being weak, it will pull back at some point and then continue up and then maybe even move higher. But if it's weak and it fills the gap now, this. So this one is continued strength in the face of market weakness. And this one is, it goes with the market and then it will do this. Okay, target. Eesh, now target looks quite ugly on the quarterly. Like you don't want to see top wicks like this. It looks so what what happens is that moves down like this tend to end by slightly overshooting a candle on the same time frame. So I don't know if you have an example to show. Like this one is a good one. Like it went down, consolidated, and the target was this. It overshot it, then bounced a bit, and continued down. And then what was the next target? Probably this, or maybe we can say this. It's we can consider it to be the same level, but it overshot it a bit and then bounced. Now we are in the middle of nowhere. Like it didn't stop at a logical level, which is either this, let's say it was a logical support, or this would be the point where it becomes overextended down, like this, or this. So it should either stop on that one, on this, or on this one. Now it's in the middle of nowhere. So this combined with the top wicks on the quarterly leads me to believe that it will continue down at some point and actually overshoot this a bit. So now we go back to the lower time frames. This is monthly. Even on the monthly, like it's in the middle of nowhere. And we have a range going for us. Let's draw it on the daily. So this, no, I'm gonna put it lower. Actually, like this. So everything was a small overshoot. And then on the lows, I can take this out. I don't even know why it's here. Let's take some of this out. This we keep because it's the midpoint most likely, or not. And the lows is probably this. So overshoot, 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 overshoot. And the midpoint is indeed this. Maybe a bit lower, but like this. Yeah, something like this. Overshot the midpoint a bit. Went back above it. It really, really looks like it wants to go lower. And if it goes below the midpoint, then the target becomes the lows of the range. And this was a recapture. If it does what I saw on the quarterly, like on the daily, okay? And by the 31st, let's say we are around here. What will the quarterly look like? The quarterly is going to be red. The third quarterly candle with a huge fucking wick. And I think this time it breaks. So Healthcare 2.0, I don't know. So it should do this, overshoot, then turn it into resistance. It won't recapture it again like here. And go for the target, which was, I don't remember, maybe this. At least 123. In theory, it should double the size of the channel. So this is $30, so 60. Somewhere in this range here, between 113 and 123, which is exactly the demand area on the daily. It's kind of screaming that it wants to do this move. And I don't see, I think only earnings can make it do that thing. Like the market being weak won't be enough, but next earning, the technical analysis says next earnings are gonna be bad. Okay, target as well. QCOM we did. SPM with Marvel and on. This one has a rising wedge on, a big rising wedge. I can draw it like this alone because overshoot. As you know, not an encouraging pattern. And we can, like the story on the daily is overshoot, rejection, went back inside. It didn't want to go lower either. He tried to go back up again, rejection again. It didn't even overshoot again. And now on Friday, another rejection with a lower high. So this is one more, it can do one more like this, an even lower high, and then it breaks down and it goes to 70 at least. And then I don't know, like it can do this, but it's not looking that good. When this breaks, it's going to drop a lot. Maybe it becomes a channel. If it were to become a channel, what would it look like? So like this. And target is, assuming it happens, let's say around June, it would be 53. It depends how quickly it does the move. Like let's say this, then it does this, and then this, and then bounce, and go back to highs probably. I'm doing it on the weekly. Let's do the daily. So yes, 70, like this, something like that. This doesn't align with the rest of the thesis though. So maybe it actually keeps doing this for a while and only has the breakdown around June. Like this, down again, up again, and then like this after June. Yeah, this seems more likely. I'm more confident in this happening than having a breakdown now. If it would have a breakdown now, we make new lows in the market. And the semis, this is equivalent, on having a breakdown now is equivalent to Nvidia dropping 20% next week. Marvel. I thought this one would break to the upside because it was a descending pattern, but it didn't. So let's put it down then, like this. So target is, if its upside target is 44, downside is 33. But let's ignore this. Let's put up ranges. I would say this is it. And overshoot, overshoot, overshoot. And this was a support. And the midpoint is around here. Yeah. So treating it as a horizontal range. This retest, maybe overshoot, then back in support. This is the buy here, and it goes up, maybe rejects a bit, goes up, support, up, overshoots, and maybe down again. But we'll worry about it when we get there. And this could happen as well without directly down, without going up again. But watch the midpoint, like watch 42. It was resistance, resistance, support, support. And when we had a candle that closed decisively below it, we went lower. So 42 is the level to watch. And then this could go as low as this. Don't think it's that low. More likely, this is 35. What is it? Yeah, 35. Probably 35 is gonna be the bottom. I don't think it will all go beyond that. Ugh, shipping did not like recession. It's on the trend line. If it breaks, it's not good. I have to let me redraw stuff because there's too much on it already. Yeah, like everything value getting killed, and then everything materials, shipping, everything industry driven. Quarterly, not pretty. I would say this is a very important level, like similar to oil, maybe lower like this. Oh no, maybe like this. Yeah, like this. So support here, even higher. This support here, support here. Then it wasn't support and it became resistance. Rejected once, twice. Yes, it will uninvert. If the Fed pauses, it will uninvert. Then small rejection here, it finally went through it and surged up. And now we're at this level again. This is like the oil chart. And it's not looking pretty. It's not as far down as oil. I mean, it's not a lost cause yet, but quite close to starting a new major leg down, honestly. So when this low, if the low goes next week, which it might not, then we have 42, and then we have 30. Yeah, and oil looks like it lost it decisively. Like I don't know what would have to happen for oil to go back up above 75 by in the next 2 weeks. Are there any like OPEC meetings or something like that? Maybe if the US says they're replenishing SPR, but I think there was a statement from some guy from the Department of Energy saying that we'll see how it goes, something like that. Nothing concrete. So oil needs news to make it stop dropping. The hope here is that it's similar to this overshoot here. From a range perspective, this is also the bottom of a range, and the top is probably uh, this small range here. and half point is this, no, higher, this, and we don't care. And now it lost this level, so the scary part is going to be something like this backtest, and it makes a new low. If it makes a new low, it's over. It's going to 42. You notice here like it lost it, but the backtest was pretty strong. It actually, on the first backtest, it went above it. It went below it again, but the next backtest always still went above it. And then it did this for a while and eventually broke out. It still could have went either way here as well, but it went up, not down. Uh, like this. When it broke out, it turned into support and keep doing this. Now, maybe it doesn't react in instantly, but even something like consolidation below the line is very, very bad. Like it's not a good sign. It doing this without going above it and closing above it is a very bad sign and most likely will lead to this in the near future. There's no, I don't know of anything on energy from the European side. Like European countries are have a lot of clean energy, like hydro. Some of them have nuclear. Germany didn't have a lot, and they relied on coal. They had to rely on coal because was mostly gas from Russia. But everyone else either has clean energy or had their own gas internally or from other sources. So right now Europe is doing pretty well from an energy perspective. Plus, it will soon be the boom period for hydro. So prices for electricity should go down because spring and spring brings rains, and lots of rain means lots of hydro. No, Europe is pretty united. The only thing is food. Like, I expect we have a wave of food inflation until around midsummer because the crops that were planted for the crops that will be harvested for spring until early summer will have been will have felt the highest cost of energy, and uh, they they will be very expensive when they hit the shelves. But everything else beside that is looking pretty good. Overall situation is nice. It's more about how do you read what? Look at oil again. The chart, like this is a range where price moves. Like it should do this, but and it sometimes overshoots. Like this was an overshoot, but it went back in quickly and it eventually went back up. And now we are we are in an overshoot. And if it doesn't go back in quickly, like here as well, it will most likely go here. So I was saying that if it consolidates below the line, the blue line, it's a bad sign and it's a sign of weakness and it will do this at some point. What we needed to do to stay bullish is go back, consolidate, then go up. Um, and I was commenting on the fact that it looks very similar to the oil chart, which also lost a major pivot. Like this is the oil chart, and I will take this out. The sorry, I will take out the small levels which we don't care about. And this one is we do care about it. So the levels we care about for oil are these. And this is a major pivot. Basically, price goes through this pivot up, it goes up a lot. Like this, like here, like here, like here. When price comes from a high through this pivot and it doesn't use it as support, it goes down a lot. Like here it became a support, but here it wasn't a support and it went to 36. It's also a resistance on the way up. And right now we came from a high like here and like here, and we went through the pivot. If we close like this, it's not a good sign for the price of oil. Uh, I think it sees at least 60 this level here, this low, but like overshoot. Not you see that the tags of the line are not clean. They always have some wicks. So this will also have a wick and probably go to slightly below this. So the target is to go lower than 57.63. Well, Europe is chasing cheap, but we've been on the path to clean energy for a long time. Like nuclear is being talked about a lot. It's we're in a good place, I think. The shock of last year was big, but the worst has passed most likely. Unless the war escalates somehow, I don't think there will be problems. So oil overshoot to here. Maybe it holds on this level and bounces and goes back up. But my fear is that it will not like this. Well, this is kind of like a depression scenario, not even recession. Recession would be 57. Depression would be 37. Okay, any more tickers? Man, the quarterlies for oil stock look horrible. Okay, 1 second. Holy shit, look at Marathon Oil and Fang and Oxy. I don't know. Not long oil. BTU also has a horrible chart. Uh, hide drawings. Nothing energy looks good unfortunately right now. CCJ, I have it here. I wanted to buy it here, like under 20, 19. This is my expected buy point. But for now, probably even even 21, 22 is a good enough buy. The long term is not shaping up well though. Like I think oil continues dropping next week because of the rejection at 70. So whatever JPOW does is gonna make oil drop even more, and oil stock will drop even more. They will do their second leg, and this should do something like this, and then go up a bit. But I don't like it at all. So this, and then continue down. Sorry, like this. Basically, we have this channel. The midpoint is here, and I think we lose the midpoint. Then it becomes resistance, and we go to the channel lows. And maybe then the macro shifts and whatever. But under the current macro, energy is probably not a good play. Mentioned that. Nothing has changed. So this one didn't play out, but this one is still playing out. And we can adjust this lower trend line. I still expect it to be a buy here. I don't want it to see it lose 1161. Don't catch a falling knife. Like, it's better you won't bottom tick, but maybe let's say it goes to 10 and then it will do this and then it will do this. This is where you want to buy on the when it already has turned bullish and it retests the major support and then it goes up. So you want to buy somewhere around here. You want to buy somewhere around here and have a stop loss around here. And the risk is more or less defined. And in theory, the tick of the support is going to hold and it goes up a lot. Aher. What the fuck? Why does it look like this? I have to look at it. Man, this is a strange chart. I think it breaks out. But this will be the final leg up. After this one, it will crater. So we have this. So this can still go down. Actually, let's nuance this. This is a channel. This is a bull flag. And it's a pretty big one. So it will have a lot of momentum when it breaks out. But for now, under the idea that the market will stay weak until the end of the month, it can drop. And it's at 32. This is a strange spot. Let me do some horizontals as well. So we have here, we have this, and we have this. What happened on March 2nd? Why did it dump? Because of the banks? I'll hide this one too for it to be clear. So this is a support. This was a golden buying opportunity if someone caught it. I think it will do a retest of 29. So let's say it goes here. And then we have the channel. Maybe rejects it once, then it breaks out, and then it goes. And the double channel target is 40. I don't think it gets to the top this time of this one. I don't remember when I drew this one. I just doubled it. Like, it could do it, but not in a single step. So we have this. And let's delete. So down, hold on 29, it goes back up, gets rejected at first, it's also around midpoint, or basically gets above midpoint, then makes midpoint a support, then it goes up, overshoots a bit, makes it a support, then goes for channel high, gets rejected, goes back here, support, maybe it goes again, resistance, and then it goes for this and gets to like 50 at the top, at the peak of the move, and then absolute crater. But I like Aher. Do they have like good options? I never played it for some reason. I always forget about it. They have like liquid options with good spreads, or it's everything. Everything is just like 20% spread. Oh, I didn't check DNN. I forgot about that one. Denison Mines. Never seen this one before. This is bullish, just in supply zone. So this is the supply zone. The demand zone, sorry, not the supply. This area here. What do these guys mine? Non-energy. What? Quarterly, whatever. If this is energy, it's bad. If this is like gold or silver mining, this is good. Major pivot time. This looks like, because major pivot time, it looks like energy. So here we are. See, major pivot time. It went down. No, actually, whatever. It started at a very high point. Then it based around here, went up, support on this line, support on this line, went back up again, went down, support on this line, support on this line, support on this line. It went through it below, then it became resistance from this candle, and then it doubled this basically. It became 2x this, it went below. And then it finally came here, went above it, doubled as well, and now it's at a decision point. So if it closes the quarterly, monthly, weekly, the quarterly it hasn't closed. If it closes below this 103 line, what's 101? Below 101, uber bearish, it will go to as low as, I don't know, 0.2, 0.3. If it stays above it, it might go back up to the highs. But live or die by the one level. I don't know what else to tell you, never seen this name before. It looks like a good bounce here, but if it's energy, don't count on it staying high up. Yeah, uranium got hit. Uranium counts as energy, so it got hit. So it will do what energy does, meaning go down. Like you saw the quarterlies on the, here are the quarterlies on the oil stuff, meaning energy stuff. Devon, XOM, also we don't care, but MRO, FANG, Oxy, CVX, PBR, BTU, Boyle, we don't care. VET is going down, but maybe reaching exhaustion, and so on. And Tesla. So Tesla stopped at the logical level. which is this one. Let's put it on this week. And now let's look at the weekly and daily. Too much stuff drawn here. Let's cut some stuff. Don't care, don't care, don't care, don't care. Don't care. And don't care about this one either. So a small overshoot above this level. If it goes through, that's a big if. It would break the downtrend. So I don't think it goes through, or not decisively. So let's draw some stuff. Trend line 1 and probably 2. Or maybe like this. Doesn't matter. It held here once. So if this doesn't become a range, so if right now assumption is range is this, and it will do this for the foreseeable future. If this is not the range, it will break the uptrend. And if it breaks the uptrend, most likely it will go below this point, which makes it very likely that this is actually a 50% point, not the high. So let's see what the other side is. So that's 38. 76-ish. So the other side would be probably this or this. Something like this. I think this area here. In the end, probably this is the overshoot range. So this is where a breakout happened. So the range becomes this. If it doesn't, if the range is either this, and if it's not this, then it is this. And this is the overshoot range. And as high as this, sorry, is the overshoot range to the upside. And I pretty much see it consolidating like this for quite a while. God, I hope the market going down next week happens, because it would be such a clean buy long when all of this materializes. We haven't had a nice clean long in a while. 25%. That's quite a lot. Alternatively, we could also see this. Like, we don't fill the gap, and this is the overshoot range, and it would be this would overshoot here and here, and that would make it, let's say, 12-15%. and it's also the midpoint of the big channel. Yeah, this seems more likely than it going as low as this. So it goes for the gap start as the target, which is also the midpoint of the channel, and basically does this. Next week, 150, 155 as the support, and then probably goes by June, May to attempt to break out here, gets rejected, does this, maybe even does a fake breakout at some point, and then craters. Let's see chart point. For charge point, I keep seeing like bullish flows on unusual whales. Not on. Let's see. Nope. Probably expired. No, I have a. So this was call selling. Eh, it's not there anymore. But I saw a lot of bullish flows last week on charge point, and it does look decentish. This was the one that I think we talked about it a while back, and it was super correlated with Neo, and it still is. And Neo is very, very close to a buy. There's this gap that hasn't been filled in since forever, and 790 is the buy. And charge point should behave the same. Like it's very, very close. It's this small gap here, the left hand fill. And let's say we do a last shove down, and it's gonna be here. So 853, 856, sorry. In this area here is probably a good buy. This is the low, yeah. And we can call it like this one. This is the overshoot. So if we and to the upside, probably this, but let's do just this part like this, and this is midpoint. Can close this one and midpoint here. Yeah, and overshoot range as low as this, let's say, but probably not that high. I would no, it's too low to go that way. So overshoot here, overshoot here. uh, I I like a buy at 8.6ish, and I think it has a very, very strong rally, like similar to this. It won't be a slow mover. I actually think I like charge point more than Neo. If it's, I think I wanted to buy Neo, but if this one, I look at this one as well. If it's more liquid, I'll buy this one. If Neo is more liquid, I'll buy Neo. Okay. Anything else or wrap it up? No, there are. I think they're only selling them in Norway. No Neo cars at all. And most likely like only a couple of people have them. Cool inverted head and shoulders on Apple. But looks like rejection. And there's a saying like there is nothing more bullish than than a fake head and shoulders breakdown, and it would be the same the other way around. So nothing is more bearish than a fake head and shoulders breakout. Okay, then I'll wrap it up, and we'll hear each other next time. Have a good day, guys. Bye bye.